What financial terminology should I know as a young carer? We make important financial decisions every day. Understanding how to manage your personal finances for you and your family can be a daunting task with lots of jargon. The following video is a collection of financial terms that are useful to know when dealing with money. Budget. A budget is a list of income, or money you receive, and expenditures, which is money you spend. From these lists, we can calculate how much money is left by taking total expenditures from total income. A budget can help you keep track of bills, food shopping, and other purchases you make. A budget helps keep you aware of your spending habits and is also very useful for planning ahead. Debit cards. A debit card allows you to spend money directly from your current account. A current account is usually a bank account or an account from a building society. It is used for everyday transactions like making purchases, receiving income, and making direct debit payments. Using direct debit is a way to make regular payments by giving a company permission to take funds from your account. This can be set up for things like monthly utility bills or rent. Credit cards. Debit and credit cards look alike, but they work in different ways. While a debit card uses your money, a credit card allows you to borrow money and pay it back later with added interest. So, if you have the money, then why use a credit card? Well, credit cards are not just for borrowing. They also come with added protection under Section 75 of the Consumer Credit Act for goods or services. Credit score. A credit score, also known as a credit rating, is a score that you are given based on your financial behaviour and record of borrowing and repaying money. It reflects how likely you are to pay credit back. Your credit score can impact whether you are approved for a loan and how much interest you are charged. If you do not pay off your credit card balance in full, you may lower your credit score, which can negatively impact you and your family. So it's important to know the interest rate your bank will charge you for borrowing and to keep track of the amount you are borrowing. Individual savings account. An individual savings account, or ISA, is a type of savings account which offers tax-free interest. If you're looking into setting up an ISA, you can use comparison websites that can help you decide which account would suit you best. Price comparison websites are also helpful for when you are looking for better deals on credit cards, loans, energy providers, broadband, insurance, and car financing. Interest rates. In simple terms, interest is the reward for saving money or the cost of borrowing money. Here are two examples. Money paid by the bank to the holder of a savings account, and the additional money you must pay when paying back a loan. The interest rate is usually specified as a percentage. There are many ways to borrow money. One way is by taking out a loan with a bank. A loan is an agreement between a lender and a borrower. The borrower agrees to repay the money over a period of time and usually has to pay interest on the amount borrowed. Another way to borrow money is through an arranged overdraft. Your bank may provide you with an agreed overdraft, which allows you to take more money out of your bank account than the total amount that's in there. You will then be charged interest every day on the amount you are overdrawn, as well as administration fees. There are other options for borrowing money, and Citizens Advice is a useful resource to help you make the best choice. Tax. Tax is money deducted from income and paid to the government. There's a variety of different taxes, and not all will apply to you or your family. For example, income tax is tax paid on money earned. National insurance is a deductible from your wages which is paid to the government to build up entitlement to a state pension or other social security benefits. You can find more information on the tax you pay on the gov.uk website. Identity theft. Identity theft is a crime involving the use of someone else's identity to obtain money. You should never share your bank PIN with anyone, not even your close family members. There are alternatives to sharing your PIN, such as adding an authorized user to your account.